Justin Reid. He's the CEO of Troilus Gold. They're working on the Troilus Gold project in Quebec. They put out a PA August 2020. They're actively drilling. They're constantly putting out drill results. So I'm quite excited to get an update from Justin to hear and see what is going on the project. Justin, thanks for joining us.
Well, thank you for having us, everybody, and thanks to Soar Financial. Troilus is a fairly new company, 3 years old. We purchased the past producing Troilus mine from Inmet privately in 2016, came to market in 2018. We're located in Quebec. Won't spend a lot of time on why Quebec is such a great jurisdiction. You can see on the map where we're located. We're in the Frotêt-Evans Belt, 250 kilometers north of the Abitibi. Same rocks, same age, same metamorphic grade. Really the big difference being we're buried under 10 meters of till compared to the Abitibi, which is predominantly exposed. So historically limited exploration. We have a large resource in the last 2.5 years. We've drilled over 140,000 meters and we found 6.5 million ounces equivalent. We're finding gold for about $3 an ounce. It's a brownfield past producing project. So the inherited infrastructure that we have significantly impacts the startup capital required in a positive way. The PEA is out showing a deposit of significance in a Canadian mining landscape, and pre-feasibility is well underway. Here's a picture of the old mine, 2 million ounces of gold and 70,000 tons historically produced. Really put into production in a $250 gold environment, expanded in a 400, was never a focus of Inmet. It was consistently an undercapitalized mine, both from an infrastructure and from a geologic drilling expansion standpoint. Focus was obviously on La Cruces in Spain and ultimately Copper Panama, which was the rationale for First Quantum hostily taking over Inmet. The resource had been exhausted, reserve had been exhausted, and the mine had been put on care maintenance, and nobody was really looking at gold. What have we done? As I said, we've now drilled through 140,000 meters. The resource has grown significantly, both in the measured and indicated and in the inferred. We've made a major discovery on the mine site called the Southwest, which is going to have a major impact on what this deposit looks like going forward. And most significantly, or of importance, we bought back our purchase price royalty from First Quantum in December for $20 million. So when most companies our size are giving them or selling them, we were buying it back. We have about $130 million out. Stock's doing well last few days, so we're actually about $140 million market cap now. Balance sheet strong, well covered by the street. We have over 51 global institutions in our name. So great shareholders. We're really focusing on retail as a growth and a focus objective of our marketing team. Management insiders own about 10%. We bought all our stock. We continue to buy when not blacked out. And what we're incredibly proud of is the Quebec ownership. The Case, FTQ, Sidex, Este James Bay. The large Quebec institutions have been there since the beginning and continue to support us and will be important for us going forward. You fly to Chibougamau, a town of 8,000 people, everything you need. We can drive you to site in an hour and a half on Route du Nord, southernmost industrial complex in Quebec. This is a kind of a layout of the resource and of the pits. Z87 and J4, 2 million ounces were produced. Z87 went down to 350 meters, J4 to about 120. We've completed the EIA. We've done all the consultations. We bought a water treatment plant from Newmont. We are fully permitted to dewater, and I'll just leave that at that for the sake of time. We'll start dewatering in the spring. The layout of the deposit, you can see on the top right, we have 1,000 square kilometers. With the success of our growth over the last couple of years, through acquisition and staking, we grabbed 1,000 square kilometers in the hopes of taking our new model and applying it to the belt. The Southwest is a brand new blind discovery. We discovered it in January of last year. We only had drilled 8,000 meters and defined 600,000 ounces at surface. We've now, through October to December last year, we drilled another 20,000 meters. Results keep coming out. We've now taken what was a 350 meter strike length and have extended it kind of through 800 meters. So from a development perspective, at surface, almost no strip, and could add significant resource in the future as we move to a pre-feasibility. Here's our growth. The more we drill, the more we find. We have about a 98% hit rate, and visually this shows it the best. In 2016, we had a couple 100,000 ounces discontinuous underneath the J5 pit. It's now called the J zone. We had 1.8 million ounces at 1.8 grams underneath the Z87 pit. 35 to 50 meters wide, 1.2 kilometer strike length, very analogous to Agnico's Goldex. That's what we came to market on. Knowing full well, however, that Troilus had seen almost no historic exploration. And if you look at the bottom, 2020, that's 2.5 years of drilling. We now have 5.5 kilometers of confirmed strike length of mineralization. We have 8.1 million ounces equivalent and growing. Put out a PEA in August of last year. Really, you know, a PEA is a flag in the ground of value. It's a moment in time. And what we were able to show was that for 333 million, we could produce 250,000 ounces a year via open pit. That's gold. Forget about copper and silver. And then transition to an underground for a 22-year mine life, all in sustaining costs of about $850. At $1,475 gold, it gives you a $600 million NPV and a 23% after-tax IRR. Great start. And our production profile is on the bottom. And when you bring in copper and silver on a gold equivalent basis, we produce over 300,000 ounces a year. That was based upon the resource in August, where the Southwest only represented 600,000 ounces and about 350 meters in strike length. We're now intersecting the Southwest, kind of out in that gap zone that we call it, and we continue to put results out. So as we move to a pre-feasibility, we've accomplished what we needed to with the underground. It's a great asset, but we are focusing on a long life open pit. So at 35,000 tons a day, we believe that the pre-feasibility is going to deliver over 20 years of mine life. So we'll decouple the underground, we'll put it on a shelf. There's value there. We can look at it in the future, but with the drilling success we're having, there's no need to even consider underground for a very long time. And here's a long section of the mineralization as we know it. We're now intersecting the Southwest kind of out through here, or it appears to be the Southwest. Assays are coming in, and I'll show you some drill results. But also to the northeast at Longe, you know, there's some great mineralization at surface, but we also drilled a hole of about 30 meters of 1.5 grams from surface 2.5 years ago, never followed up. So the geophysics looks great between it. We've done airborne completed IP, and B soils work incredibly well, show continuity to the zones. And so we believe that the 8.1 million equivalent you see on this slide could easily expand. And here's an example. If you look in the top right, that's the main ore body. Let's go 2.5, 3 kilometers to the south, to the southwest. Here is our PEA pit shell on one of the sections. You know, what we are seeing through our drilling, and that represents really 1 month of drilling. Now, with all the additional drilling we've done, we are now extending 200, 300, 400 meters away easily from the edge of the pit to the northeast, back towards Z87. We are seeing a lot of continuity. We're seeing higher grade intervals within broader, lower grade, or just like we do at Z87 and at the J zone. Very, very analogous. It's the same thing. Slightly more magnetic, a little more alteration. We've seen some higher grades, and it's quite exciting going forward. And we have right now 4 drills on the exploration and development. We have a geotech drill. We also have a tailings drill underway. and we're drilling 7,000 meters a month for the foreseeable future. So can't give you an exact number because we have no plan to stop. Where does Troilus rank? The PEA, and this is a bit of a cheeky slide because we assume all the other great deposits in Canada never get built and that we're at full production today. But what we're trying to accomplish is to show the scale that Troilus could be. At 250,000 ounces a year, plus or minus, for a significant period of time, Troilus will be a top 10 producer in Canada at lower quartile costs. And the real reason we're able to accomplish this for the CapEx we're saying is this. We inherited a reclaiming site where the infrastructure had been taken care of. So we have no mill, we have no production camp, but what we do have, and we've invested a lot of money over the last 2.5 years in upgrading this infrastructure to a level of production readiness. 40-kilometer road from the highway, production ready. It's the old haul road. We've upgraded it. There's no further upgrading required. Hydro-Quebec has restrung 60 kilometers of power to our 50 megawatt substation. ABB has left site. The substation is completely production ready. We're getting power at 3.2 cents a kilowatt hour. As I said, we've purchased a water treatment plant from Eleanor, and we've installed it in between the two pits. We're going to start dewatering. Up to the kind of the top right, we have a 75-man camp in place. We have full water, septic, potable water, sewer in place, and we have the exact same for the construction camp. We're on an active mining lease, and probably most importantly, we have a fully permitted tailings facility underneath these pictures, 6.5 square kilometers, that if we had tailings today, we could put it on. We have to amend our existing mining lease. That's a 12-month process. So the analogy I like to use is we're halfway around the racetrack. Anybody who says they're fully permitted, even if you're an active mine, you're never fully permitted. You're always updating and amending permits. We'll put in when our pre-feasibility comes out, we'll file our project description. And from there, we're looking at a 12 to 14-month permitting period. All of this infrastructure together, though, is about $350 million in savings. But more importantly than that, it's about 3 years of permitting. And what that means is dilution to our shareholders that we're not incurring and accretion. So we're going to lease our fleet. Our First Nations partners are going to build our 400-man, $25 million camp. And so if you take our Komatsu fleet, our First Nations constructed camp, this inherited infrastructure and our CapEx, you're looking at an $850 to $900 million build if this was a greenfields operation. So it's very analogous to Cote in that sense. Just to wrap up, capital intensity is low. We plot well on a global scale of assets. We have high grade. In 2019, when nobody was looking, we drilled some exceptional results, 7 meters of 20 grams. That persists across the entire belt and is going to influence our deposit when we move to a production decision. And we've taken this growth and we've applied it to the belt. And for the first time last year, we started looking regionally and we made 3 great discoveries that we're going to continue with. ESG is important. If you don't have social license, you have nothing. We are the first company in Quebec to receive our Ecologo certification. It's a major driver for us as we move forward. And what you can expect from us, just to wrap up, 7,000 meters a month, metallurgical work coming, tailings work coming, pre-feasibility at the end of Q3 into Q4, and regional exploration. So we're very news heavy. The more we drill, the more we find, and we think it's an exciting asset and project going forward. I'll leave it there.
Justin, that was a fantastic presentation. Thanks for running us through that. And you are very far along, and we have time for like 30 seconds for a question. So PFS timeline, of course, and then permitting. Just maybe as what are the details of the permits you still need? Like 12, 14 months, what do you need?
So we're going to file our project description. So really what we're doing is we're amending our mining lease to a full production permit. So we're going to, there are 300 permits that you need in a mining operation, but the big ones are really our operational license. And for us, we are redoing the complete EIA. And that will be submitted the middle of next year as well. So with the pre-feasibility out, we will be 8 to 10 months till the end to the feasibility. So call it the end of 2022. And at that time, we hope to be financed and ready to construct.
Awesome. Tight timeline. Let's make it happen. And now I think there are a couple more questions in the chat as well about the dewatering costs, G&A as well. So if you could get to those, that'd be fantastic. Thanks so much for joining us, Justin. It was great to have you present.